Welcome one, welcome all to DeFi High. Mine and David's new show that we're going to be doing daily, Monday through Friday at 9 a.m. Pacific and noon on the East Coast. I'm not going to go around the world and do all the time zones. You're going to have to do use your fingers, figure that out. But David, how's it going, brother?
Man, the freedom is in the air here in Florida, Mike. I got to tell you, it is just great. I love it. I really do. I've got.
No, that's awesome. You were able to get out of California with a K and move to a place where liberty and freedom is still reigning supreme.
Yeah, I mean, no kidding. And where I am right now, a guy that I've known for several years, actually a client of mine. He became a good friend of mine, and he's letting me use one of his properties. So I'm out here streaming. I'm just going to be focused on creating the best content that I possibly can with you, Mike, and with everyone else in the school community. And there's a pool here. Like, dude, it's amazing. So I'm blessed, very blessed. And so what I want to focus on here today is, it's the start of the week. And I want to start things off by taking a look at some TA. And then from there, I want to just keep it super, super simple. So as we take a look at a couple of charts.
Well, real quick.
Yeah, go ahead, Mike.
Let me introduce everybody to you. Let's since it's our first show. Tell everybody a little bit about who you are, because you're new to the arena, and I have your account on the arena up. So anybody that's watching, if you could pop on over, give David Zimmerman over here at DeFi University a follow. He's going to be putting some great content, and you're going to see here in a minute, the quality of the content. You think that I know about DeFi and I know about crypto, listening to some of the content that we put out in the stages. David's on a whole nother level. He knows this is how he makes his living. So he doesn't have a roof over his head if he doesn't do good DeFi. So I want you to understand where he's coming from. This is something that he lives and breathes. So if you could give him a follow over there. But David, tell us a little bit about kind of your origin story.
Sure.
How did you find DeFi, and kind of what is it to you?
Absolutely. So, Mike, I live, sleep, eat, and breathe crypto and DeFi. This is what I do professionally. This is all I do. And like you said, if I'm not successful, then I don't eat. So I do pretty well. And my origin story, so, in 2010, I went to a transfer from a community college in Northern California to University of California, San Diego. And when I got to UC San Diego, I immediately moved from a dorm that I was at to this mansion on a cliff overlooking Black's Beach. So I lived in La Jolla Farms my first year.
Okay, I'm familiar.
I was there with 8 guys. So it was me and 8 guys, and we rented this house. It was like $7,000 a month in 2010. And so we all chipped in, we got this great place. And from there, I started a biotech company with a buddy of mine named Boris, and it was called Vaccenta. And Boris was a brilliant biochemist. And Boris introduced me to options. Now, my experience at that point in markets was, and remember, I was like 22. My experience in markets at that point was I had bought some gold and silver. And in 2010 and 2011, that was that first big run out of gold and silver. So, just by buying some physical gold and silver and, GLD, that ETF, I made some money. And that was my first entry into markets. And I thought to myself, hey, this is easy. I can do this, Well, it turned out it's not easy. You really got to work at it.
Yeah.
But, so that was the first thing that I bought, gold and silver, on that first run. I started the company with Boris. Boris introduced me to options. And the moment, that was in 2012, the moment that I was introduced to options, I immediately fell in love. I knew I loved options. I loved the math behind it. And I found Tom Sosnoff and Tony Batista at Tasty Trade. And so those are the guys who built Thinkorswim. And so they started Tasty Trade. I think they started it in the middle of 2011. And so in 2012, it was brand new. It was a brand new platform. And Tom Sosnoff has since exited Tasty Works. So he built a brokerage around that. So Sosnoff is a legendary options trader. And I learned options, how to trade options from him over the course of a decade. And I, became a professional options trader. Did pretty well. I really, really love options. And then, trading options, trading futures options, different derivatives over the course of about a decade. And then in 2023, I was hired over at Crypto Labs. So Lucas hired me over at Crypto Labs in October of 2023. And that's really when I went full time into DeFi, full time into crypto. So I went from TradFi, options, futures, to DeFi, crypto, perps, and LPs, and all sorts of different products. And so over the course of, from 2023 to today, I really built my DeFi skill set. And so that's really what it's about, Mike. It's about a skill set. And in order to build that skill set, you need to speak the language of DeFi, the language of crypto, the language of finance, And there's all this jargon, all these different terms. And, if I start saying stuff like, well, I need to be delta hedged, you're going to think, what the hell does that mean?
And just so everybody knows, this is a great segue into getting started. So my role here is going to be a translator and a way to simplify things, because I'm not a subject matter expert when it comes to DeFi. I am chronicling my journey and sharing what I'm doing, and and trying to teach you all out there some of the terminology, the mistakes that I'm making, the successes I'm having. Mine is more of a journal of my journey in DeFi. David is a subject matter expert. There's a big difference. So our community, we share a lot of the stuff that we do, and some of it, we're successful, some of it we're not. On our other shows, we have subject matter experts. Like after this show, we have Taylor and Jeff, who's a licensed financial advisor and an estate lawyer. So this show moving forward, David is going to be sharing his vast knowledge. And at times, I'm going to interject and just be like, David, when you say delta neutral, what does that mean? When you say hedged, what does that mean? So we want this to be an entry level, DeFi learning opportunity for those of you that have always wondered about DeFi. But everybody out there has such high level, DeFi that they're putting out there. There's nothing in between. There's no entry point.
Right.
So we're making this an entry point. And then, of course, David has DeFi University that you can go and get, medium and advanced strategies at. So, David, let's go ahead and kick this off.
All righty, man. So, and by the way, I bought my first Bitcoin in 2012 for $40. Now, I didn't hold it. You buy something for $40, it goes to 1,000. You think, hey, I had a pretty great return, but it's not easy to hold something from 40 to 126,000,
Yeah.
So, all right. So let me start things off here. I want to go ahead and share my screen. So I'm going to share my entire screen and we're going to kick things off. Now, Mike, the first thing that I want to jump into today, because it's Monday.
Let's do this.
Let's do it.
There you go.
Man. So I want to start things off. Let's just take a look at Bitcoin. And this is a chart of Bitcoin. I've got a couple of horizontal lines drawn on the chart. This is a daily. You see this D up here? Now, this piece of software that I'm using, this is called TradingView. And TradingView is just a great piece of charting software. It's totally free. You can get started for free. Don't need to pay anything for this. And where I want to begin is just by taking a look at Bitcoin, and I want to zoom out. So, when in doubt, zoom out. So the first thing I want to do here is change the time frame from a daily to a weekly. And so on the weekly, there's a couple of things I want to point out on the chart of Bitcoin. So here's the all-time high. Now let me go ahead and grab a brush tool. See this little tool right here? You can also grab it here in the toolbar. This is a brush. It allows me to draw on the screen like that. And so I want to point out the definition of an uptrend. So, Mike, an uptrend is defined as a series of higher lows, as we see here, and higher highs, as we see here. This series of higher lows, 1, 2, 3, and
Yeah.
higher highs, 1, 2, 3, that is the definition of an uptrend. And so even though Bitcoin has corrected from its $126,000 high all the way down to the trough that it put in just a few weeks ago at just above $80,000, even though it's corrected like this, it is still clearly in an uptrend.
Mhm.
So that means that on the longer time frame, you should be bullish
Okay.
because this uptrend has not broken down. Now that we know that Bitcoin is still in an uptrend, let's go ahead and zoom in to this pattern right here. So this pattern is referred to as a flag. Now, let's go ahead and define a flag pattern.
Okay.
You've got a couple of different types of flags. You've got a bear flag, which is the pole, and then importantly, the flag itself must be kind of upsloping like this.
Mhm.
And so what do you see right here? This is the pole, and
Mhm.
this is the flag. And so a bear flag is a bearish continuation pattern. And so
Okay.
what you should expect is for Bitcoin to break down. That's what you
Really?
should expect. Yeah. And
Okay.
so remember, we're looking here at conflicting pieces of information. We want to be able to figure out, hey, on the longer time frame, what is an asset likely to do? But then when we zoom in here to a shorter time frame, just the last couple of weeks, we could even zoom in from a weekly to a daily. Now, when we zoom in here to a daily, let me go ahead and just remove these drawn objects, those brush strokes that I've got there. So this is a little bit cleaner. And then I want to change this tool to a cross so that I can just zoom out a little bit. So now that we're on the daily time frame, I want to point something out about this particular Bitcoin bear flag pattern. If
David, real quick. And I don't mean to insult anybody, but what he means by daily is each one of those candles. It's kind of hard to see, but if he zoomed in, each one of those candles represents a full day. If he went to the hourly, each one of those candles would represent 1 hour. Sorry, go ahead.
Exactly right. So, as Mike was saying, you see right here, everyone, when we take a look at the time frame tool up top here in TradingView, you see where it says D right there? If I click on that, then I can change the time frame that I'm analyzing the chart on. So if I'm looking at this on a daily, when I say this is a daily, it means that I'm looking at the chart where every bar is 1 day, just like Mike said. Now, let's say that I wanted to zoom in to an hourly. Well, I would just go ahead and click on the 1 hour. And what do you know? Now, every single one of these candles, they're referred to as candles, is 1 hour. And so if we just take a look at a particular candle for a second, let me define what a candle is. So you see this right here, how you got this body of the candle, where let me just go ahead and grab my brush tool and I can point this out. So this green bar, this is the body of the candle. Now, this is the top of the body. I just marked it. This is the bottom of the body of the candle right here. Now, up top, you see how you've got, this is referred to as a wick. So this is the wick of the candle right here. And right here, this solid green part, this is the body of the candle. So I just wanted to, define the body and the wick so that we're all on the same page. We start to learn some of this jargon that we use as technical analysts when we're taking a look at financial charts. You could use this for any type of chart, though.
Mhm.
So now that we're zoomed in here to an hourly, what's really, really interesting about technical analysis is that you'll start to see the same types of patterns play out on different time frames. So remember when I was talking about that bear flag pattern?
Yep.
Well, what do you see right here? Remember the bear flag? You've got the pole, and then you've got the upsloping flag.
Mhm.
Well, what do we see right here? We've got a pole, and then we've got the upsloping flag, right?
Mhm.
So if we zoom out, if you recall, just from a couple of moments ago, if we zoom out here to the weekly, so now remember, I hopped up here to the time frame.
Still got that bearish flag.
Still got that bear flag.
Yep.
Here's the pole, and here's that flag. So we see the same pattern playing out on multiple time frames.
Bitcoin's giving us the pole.
It's giving us the pole, man. And so what's really interesting about this Bitcoin bear flag pattern is if I zoom in to a daily. So now I'm on a daily time frame where every single one of these candles is 1 day. If I go ahead and hop on over here to a trend line tool, I want to go ahead and hover my cursor over the trend line tool. And you see, Mike, this little arrow that pops out?
Yeah.
Now I can click on where it says trend line tools. And then I've got all of these different options for different types of trend lines. I want to grab a horizontal line tool. So I've got my horizontal line. I want to go ahead and mark a level of what was resistance and became support. And I want to go ahead and show how that works.
Now, real quick, I want to preface this. So David's about to get into something that's very important in DeFi, and it's pretty much the only thing I use charts for, is finding lines of support and resistance, because often you will use those lines to create your ranges inside of liquidity pools. So go ahead, David.
Absolutely. And, understanding support and resistance and how support becomes resistance or resistance becomes support, this is foundational to being able to analyze charts of financial assets. So if I just go ahead and point out 2 levels here that are important. So this one, you see here where price touched this level at like 94.5 or so and was rejected a couple of times, once right here, once right here, and another time right here. So if I just go ahead and circle these levels, this was a level of resistance for Bitcoin. And so now I'm going to hop on over here and I'm going to grab that horizontal line tool. I'm just going to throw down that horizontal right there. And I want to go ahead and remove those brush strokes so that this is a little bit cleaner. I like to keep my charts as clean and simple as possible. What I've found over the course of, greater than a decade analyzing charts is that the more simple your analysis, the better. It's not about, at least in my opinion, I don't think that great technical analysis is
you don't overcomplicate it.
Yeah, you don't need to have 50 indicators and, be looking at all sorts of like momentum and, anything like that. You absolutely can. And those are useful sometimes. But I think the most powerful technical analysis is the most simple technical analysis. So typically I'll have a horizontal and maybe a trend line or 2, and that's it. And so right here, notice, see where price got rejected? So right there at 94.5, almost 95K, price got rejected. You see right here, price also got rejected. Yep. Now, what happens to this level of resistance? So this horizontal, because price respected this level, it is referred to as resistance. Price was rejected at
going up. And think of it like a ping pong ball. It went up, it hit the ceiling, it bounced off, went down, came up, hit the ceiling, went back down. So
exactly,
you can kind of see those points that David's pointing out.
And so when a level of resistance gets broken, so you see right here, if I just go ahead and zoom in so we can see this a little bit more clearly. So when price broke through this level of resistance, the resistance flips and it becomes support. And so this is referred to as a breakout. And so we had this breakout right here. And then notice price did its very best to cling to that level of support, but it did not hold the level of support. And in fact, it broke back down below this level of support. And so what that means is this pattern, if I go ahead and grab my brush tool, this pattern right here, that breakout, because price broke out and then was rejected, it did not hold the breakout. That makes this what's referred to as a false break. This is a false breakout. And so now what should you expect? Well, remember, price right here this was resistance. Resistance. When it broke out, this level of resistance became support. Now, when it broke back down, what happened to this level of support? It flipped again and became resistance for a second time. And so now what should you expect? Well, if price moves higher, you should expect this level at 95K to hold as resistance again. So you've got the breakout, the false breakout, you've got the level of resistance, the false breakout, and now if price moves back up to 95K, you should expect that to hold as resistance again.
And I'll tell you just real quick, whenever I see, like, if this was a range that I was using, if there was a support line at the bottom that David's going to get into here in a minute, and it broke out like that, you're out of range, so you're not earning yield. However, I don't rush to rebalance. Sometimes I'll wait, especially if it's towards the bottom, because again, this one came back into range. So if you just would have waited a minute in this case, you would have gone back into range and started earning yield again. So I just wanted to point out kind of how this all ties together. But go ahead. Sorry, David.
Absolutely. So I've just got a cell phone ringing in the background here. My apologies for that. As I get more set up here in Florida, I'm going to make sure that everything is clean and professional moving forward. But in the background there, I've got a cell phone ringing. So just want to apologize for everyone who can hear that. And so now let's go ahead, and now that we've got what is a level of resistance up above, let's define support below. And so what I want to do is I want to grab another trend line tool. So I'm going to go ahead and hover my cursor over the trend line tool selector here. I'm going to click on that little arrow, and I want to grab just a regular trend line tool. And so now what do we need to do first? We need to define what's referred to as an anchor point. And so the first thing that I want to do here is grab a brush so that I can just share with you guys the anchor. So I'm looking for a local low. So local simply means local in time, like near to you in time. So this is a local low. And this is also the lowest point on this daily chart that we're looking at. So this is going to become my anchor point for the trend line that I'm going to draw. Now that I've got my anchor point, I need to go ahead and connect this new trend line that I'm going to draw to the next higher low, which is right here. And so if I go ahead and grab that trend line tool, I anchor it to the local low, and then I connect it to the next higher low. And if I extend to the right, just like that, what do you know? There's support. So what do we have above? We've got resistance above, and below we've got support. And so if I zoom out just a little bit here, so we've got a little bit more data to look at. Now that I've zoomed out, if I extend this trend line just like so, this pattern is a right triangle pattern. Now, a right triangle is usually a bullish pattern. So we've got a couple of different patterns going on, right? We've got, if I zoom out a little bit further here, we've got the bear flag, we've got this pole, and we've got this flag here. So that is a bearish price action pattern. And then we've got the false breakout, also bearish, but we've got this right triangle, which is usually bullish. So you've got a couple of different conflicting pieces of information. For me, Mike, it's always important to have as many pieces of data as possible. I want to make my decisions using as much data as I can possibly get my hands on. So now that I've got this level of support, I can go ahead and start to construct a trade, or at least start to look for a trade setup. What could that look like? Well, if price were to, let me grab my brush, if price were to break out again and push above that level of resistance, then I would maybe think about getting long Bitcoin on a break above that local high right there. So this high would become the next level of resistance if price breaks out again. So I could say to myself, hey, you know what? I want to be patient. I want to be very patient and I want to wait for a great trade setup so that I've got a little bit more of a high probability of price moving my way. So it's really important to be patient. I think that, we are all retail traders. We are retail investors. And so one of our biggest edges, we all need an edge. One of our greatest edges is being patient. We need to be very, very patient, wait for a trade setup that looks like a high probability trade setup. And then we need to define the parameters of our trade. And so as of right now, would there be a trade? Well, in my opinion, probably not. I would wait either for a breakout and a test of this level up here at 97, 98K. That would be what I would look for a long setup. Now, on the other side though, let's say that price gets rejected. Let me go ahead and zoom in a little bit here so we can see this more clearly. So if I zoom in on this chart of Bitcoin, remember you guys, this is a daily. So I want to go ahead and grab that brush again. Now, if price breaks out and goes ahead and breaks above this level of local resistance, that for me would look like an interesting long setup. Now, what happens on the other direction though? If price were to break down and move here to this level of support, if price gets here to this level of support, that could also be an interesting long setup because you should expect support and resistance to hold. You should not expect that when price gets to support, that it breaks down below support. In fact, you should expect the exact opposite. If price gets to support, you should expect support to hold. And that means that this could be an interesting setup for a bounce play. Now, the same thing is true on the upside. If price were to move just a little bit higher to this level of resistance, I would expect that level of resistance to hold. So now you can start to say, hey, well, there are some interesting trade setups potentially here. If price moves up to resistance here at 95K, that would be an interesting short setup. And you would play the short down to support. So that's one potential trade. Now, if price breaks down to support, that would be an interesting long setup to play a bounce off of support. So those are a couple of interesting little trades that I see potentially playing out or about to play out here on this daily chart of Bitcoin. Now, since we have a bunch of pieces of information already, if I just zoom out to the weekly, I want to just draw this in one more time so we're all on the same page. We've got the bear flag set up right here. That is a bearish piece of information. Now, if I go ahead and zoom in from the weekly right here, the weekly time frame to the daily time frame, we've got that bear flag, but we've also got this false breakout. So that's two pieces of bearish information. Now, let me go ahead and zoom out one more time to a weekly. And here from the weekly, I want to go ahead and use a moving average. So I really do like using moving averages. So I've already got the moving average tools here, and you can add these to your chart very simply by clicking on where it says indicators. So if you click on indicators and then in the search bar, if you type in SMA, we're looking for a simple moving average. So that would be this tool right here, simple moving average. Once you click on simple moving average, you want to go ahead and change the length. So the length here refers to the time frame. So if I'm on a weekly time frame and I have, let me just go ahead and let's use the 50 period moving average. So you see here where it says show, I'm just going to go ahead and show the 50 week. So this 50 week moving average, if I go ahead and click on the settings tool here, you see where it says length. If I change this to, it's set to 50. So 50 refers to the period. And so the period and the length and the time frame, those are all in this context 3 different words that refer to the same thing. They all refer to the time frame that you're setting the moving average to. So if I've got this set to 50, the length set to 50, and then I zoom in to a daily, now this is a 50-day moving average. And look at how interesting this is. You see how if I just zoom in a little bit here and we go ahead and take a look at that 50-day moving average. So this 50-day moving average, grab my brush tool, notice how there is a confluence. So a confluence is when you have 2 pieces of information that tell you the same thing. So notice we've got our trend line support right here, trend line support, and we've got the 50-day moving average. And so that makes this level of support on Bitcoin right around 90K. That's a pretty decent level of support.
And if you can find other data that continues to confirm that level, then that would make it a stronger indicator of potential.
Yeah, like, I would be looking for some type of a balance. So if I have a bunch of pieces of information that all tell me the same thing, it makes that analysis more significant. And so
Gotcha.
now, if I see price retrace down to this level of support, because we've got the 50-day moving average and we've got this level of trend line support, that makes me more confident to open a long, exactly right. I would be looking for a long trade at support because I've got the 50-day, I've got trend line support. So that's
now the opposite can be true if all of this was inverted, if it was flipped, if the trend line was going down and you had and the price of the token was below that 50 EMA, then it could be where it would bounce and you would want to do a short, correct?
Yeah, it really just depends on if this level of support, this pattern, is this within a larger bearish pattern? And it is, because if we zoom out just a little bit, this is a bearish pattern. We've got here a series of, here's the all-time high, here's a lower high, here's a lower high, and a lower high. And now here we've got a low, a lower low, and a lower low. So this is a downtrend.
When I dip, you dip, we dip.
So we've got this on the longer time frame. We've got a downtrend.
Yeah.
But if we zoom out even further, what did we have at the very beginning of the call? We pointed out this longer term bullish uptrend. So on the longer time frame, this is a bullish pattern. But if we zoom in here from the weekly to the daily, right here, this is a bearish pattern. So remember, it's all about getting as many pieces of data as you possibly can to help you determine, do you want to get long or do you want to be short? So now that we've got the moving average, let's go ahead.
Longer is always better.
Longer is always better. Exactly. It's always better. And so let's zoom out here to a weekly, because I want to share something about the 50-week moving average here. So one of my favorite analysts, Mike, on YouTube is Benjamin Cowan. And something that Ben Cowan has pointed out time and again about the 50-week moving average for Bitcoin is that when you get a break of the 50-week moving average during a Bitcoin bull market, when you get a break of the 50-week, so look, you see right here, price broke down below the 50-week moving average. When you get a break of the 50-week and you get 2 weekly closes below the 50-week, now what does that mean? So if I've got, let me just go ahead and change the tool here so that I can move this chart around. So these candles, remember the body of the candle, if I just go ahead and point this out here with an arrow tool. So this is the top of the body of the candle. This is where price opened on the Sunday that this weekly candle started. So that's the top of the body. That's the open on the weekly candle. Now the close, where price closed that week, is down here, the bottom of this candle, the bottom of the body of the candle. That's where price closed. So we had the breakdown below the 50-week and the close. This is the first weekly close below the 50-week moving average. Now, where is the second weekly close? Right here. So we have two weekly closes below the 50-week moving average. And historically speaking, that has marked the start of a Bitcoin bear market. So if we've got a potential Bitcoin bear market here, and price, if I go ahead and you see right here, this tool set, I click on that little arrow, and then I'm looking for the measure tools.
The Fibonacci.
Yeah, I actually want to grab just a price range tool.
Okay.
Just so that I can measure.
I just like saying Fibonacci.
Yeah, Fibonacci's are great. They can be super useful sometimes. So if I measure from the all-time high down to the trough, this low that Bitcoin put in at just above 80K, Bitcoin from peak to trough has been down as much as 36%. Now, in every
historically, or
in every previous Bitcoin bear market, price has declined by greater than 36%.
Okay.
So that tells me that if we have entered a Bitcoin bear market, that there's probably more downside ahead. So remember, I've got a bunch of different pieces of information now. I've got, if I zoom out, if I just take a look at this, this is a clear uptrend. But if I zoom in a little bit, we've got the break of the 50-week. We've got two weekly closes below the 50-week. And we've got a bear flag pattern. And Bitcoin has been down by as much as 36%. But that is nowhere close to the amount on average that Bitcoin is down during bear cycles. So that tells me, when I take a look at all these pieces of information together, that tells me that I think it's probably more likely that
we're going to break down.
Yeah, that Bitcoin breaks down here from this bear flag and this triangle pattern.
Well, DCA and Prey tends to agree with you.
Yeah, man. So, I'm just drawing some really, really basic technical analysis, but notice how powerful the simple technical analysis is for helping you to figure out where price might go next. And so if this is the start of a Bitcoin bear market, that would make this just a relief rally. This is just a relief rally. This is part of that bear flag. You're getting some relief after this big move down, but I think that Bitcoin could be about to start its next leg down. So let's say that.
Here's a question from X. Bear market meaning 30 or 60?
So when you say 30 or 60, I'm not quite sure what the question is referring to.
I'm guessing. I mean, if he wants to clarify, that's cool. But I'm guessing what he means is like 30% or 60%. Like, I know a lot of people are talking about with institutional adoption that potentially we're going to see weaker pullbacks during bear markets. I think
that's a good point. That's a really good point. And see, it's all about getting as much data as you can possibly get your hands on. Because if hey, well, this is a longer term uptrend. And yes, this is bearish. And the break and close below the 50-week is bearish. But we have these things now called Bitcoin ETFs. They did not exist a couple of years ago. So
it's more data. It's
just more data
factors that you need to factor into the formula, and not to say that it's a perfect science. Just like Pat McCrotch, Drew's dad, is saying, how is this throwing bones and reading the results? It really, I mean, all it is indicators. It gives you a higher probability of guessing what the market's going to do. Nothing's guaranteed.
Exactly.
That's
That's
why they call this
exactly
male
right.
astrology. Is
Yeah,
we're
you
guessing
know, it kind of is. It kind of is. But
educators.
yeah, I think that it's a little bit more powerful than astrology, I would say, because when you see the same types of patterns play out over and over and over again on all sorts of different assets, you
Mhm.
start to read the patterns. And, for someone like myself who has spent greater than a decade staring at charts all day, like you can just kind of look at a chart and instantly point out support, resistance, trend, and start to get a sense for where price could move next. And
Mhm.
so let's say that even with the institutional adoption, let's say that even with that, Bitcoin breaks down. And so if Bitcoin were to break down, what would that look like? Well, you would need to see a break of this level of trendline support. So if this level of trendline support breaks, then price would most likely move first to 80K. That would be the first level of support. So let me just go ahead and throw down a horizontal. So this would be support number one. Now, if price breaks down, I would expect this level of support to hold as some type of support, but this is not the best level of support. Where is the best level of support?
I would
Well,
say back that range, there to the left, that where it was kind of squiggling up and down. I would say that where it was bouncing and using it as resistance before would be the next level of support. Would be my guess.
yeah, so you see right here where we've got support, but let me just go ahead and show how this was resistance. So right here, notice how price got rejected at,
Mhm.
let's call it 74K. So price gets rejected once, twice, right around 74K. Here's a third and a fourth time, just a little bit below 74K. So this was resistance. Now, take a look and see how price was rejected for a last time here, but then it broke. It broke out above this level of resistance.
Mhm.
And so when you get the break above, the resistance becomes support.
Well,
And
well,
so,
and again, the more confirmation you can get it out, like if you zoom out and you might see that further back in time that that maybe that was support or resistance in a previous time period. So the more that
exactly,
you can see where David's pointing out where it's acted as support and resistance, it makes it a stronger level.
it really does. One thing that's really interesting about support and resistance trend lines is the more times a level of support or resistance is tested, meaning
Mhm.
the more times price tries to break out or tries to break down, the more likely it becomes that it does break out or that it does break down. And so, usually, once you get to the third or fourth test of support or resistance, you see a break. So you usually don't see that break on the first test or the second test, or
Mhm.
sometimes even the third test. By the time you get to that fourth test, you usually see it break. So what do we have here? We've got resistance, resistance. Here's the breakout. So now this level of resistance has become support. And look,
Mhm.
it held as support. Right here, notice the 50-week moving average held as support once. It barely broke, but held as support twice. And notice where price came. Price came right down to that level of horizontal support. So
Mhm.
we had resistance, resistance,
So
breakout.
what you're saying is we got to go down there one or two more times.
Yes, what I'm saying is it looks like we've got a bear flag forming. We've got a
Mhm.
little bit of a relief rally. We've got the
Yeah.
false breakout. We've got
Yeah.
the breakdown below the 50-week moving average right here. And if price were to break this level of support, I would expect that it would eventually move to 74K. That would be better long-term support.
Mhm.
So if you can be very patient, the best long setup, I think, would be to wait for a breakdown to 74K to
Mhm.
buy Bitcoin at 74K. I think
Mhm.
that would be a really interesting long setup to play a bounce off of
Gotcha.
74K.
Gotcha.
So now that we've taken a look at Bitcoin, I find it very valuable to look at other charts that also contain Bitcoin, other, measures of the crypto market that contain Bitcoin and maybe all altcoins too, just so that we can get a bigger picture view. And so to do that, I want to go ahead and scroll down through my watch list here, and I'm looking for total, the total crypto market cap. And let me just go ahead and remove these drawn objects so we've got it a little bit cleaner here. And so now this is the total crypto market cap. And notice how simple I keep the chart. How many indicators do I have on the chart? Two. I've got a 50-week moving average and I've got trend line support. And that is it. I don't need anything more than that. Now, what do we see here? We see clear support once. We see clear support twice. We see clear support 3 times. And then, we're on the 4th test of support. So what usually happens the more times you test support? It breaks. And take a look here. We've got the breakdown below the 50-week moving average. And then take a look. This is referred to as a retest. So we've got the breakdown right here below the 50-week moving average. That is the breakdown. And so now this moving average, it was support right here, and it was support on this weekly candle here. But when the 50-week was broken to the downside, the 50-week became resistance, just like a trend line.
Until we got the devil's dildo.
I know, look at that. It looks like a middle finger,
Right.
Yeah. And so now we know, hey, the 50-week is resistance. So this could have been an interesting short setup to get short digital assets at the test of 50-week resistance. And so what happened? Price was rejected at the 50-week. And now that price has been rejected at the 50-week, we've got a pretty clear, right here, if I just go ahead and grab my brush, this is a pretty clear bear flag. And so now what do we have? We were taking a look at Bitcoin on multiple time frames, and we saw the same type of pattern. And now we're taking a look at market cap for all digital assets, and we see a very similar pattern where we've got that bear flag, we've got the breakdown below the 50-week, we've got the retest of the 50-week, it held as resistance, and we've also got this longer term trend line support, which has now been tested once, twice, 3 times.
So David, we got about 10 minutes left. I have a hard stop at 10 for the Money Talks episode, and you're welcome to join us on that as well. But Colin in the arena chat kind of brought up an interesting point. I tend to agree on some levels. He says, we don't have enough data for a bear. It's 50-50, but macro seems risk on. And from a standpoint that I look at is if you look at the news, and you look at adoption, like institutional adoption and legislation and, that clarity and, all of those things, very, very bullish. But you look at the charts and you look at the prices of crypto and they've all been just bleeding. So it's this weird, conflict of, okay, is this technology being adopted? Is it being, built on? What do you feel is going on with that?
Yeah. So in my opinion, the digital asset space is still nascent. And all that word nascent means is that it's still kind of up and coming. We still don't have true regulatory clarity yet. So that Clarity Act was not voted on last week. And the big institutions need to know what is legal and what is not for them to really start to adopt digital rails. And so are we going to see big banks like JP Morgan start to move their repo book onto digital rails? Yes, we are. We know that with Canton and Connexus over the next 24 months, they're going to start to move maybe 15 or 20% of their repo book onto digital rails. So let's go ahead and see if we can view these digital assets through the lens of what traditional markets are doing. Now, to do that, there are a couple of different indexes that I want to take a look at. The first of them is the S&P. So this is the S&P futures. The ticker here is just ES, and I'm always looking at the front month contract. So you know how we trade perpetual futures? Well, in traditional finance, we have traditional futures. Traditional futures roll. So you see here, this little indicator,
Yeah.
this is a contract switch, also referred to as a roll. So you roll from the front month contract, which is where all of the volume is, to the next. When that contract expires, you roll to the next contract. Now in perps, there is no roll, hence the name perpetual. And so how do you keep price pegged to a spot price when you're trading perps? It's all about the funding rate mechanism. That's what keeps the price on a perps DEX pegged close to the spot price external to the perps DEX. So perps use a funding rate mechanism, whereas if you're trading traditional futures, they roll. So they expire and they roll. Perps don't expire. So just wanted to point that out real quick. Now, if we're taking a look at the S&P 500 and we zoom out just a little bit here, this is a clear long-term uptrend. Obviously, the S&P, its average return is like 15% per year, maybe a little bit less than that, but so really great year-on-year returns when you average it out over the course of many decades. Now, let's just go ahead and zoom in here from a weekly to an hourly. And the reason why I want to zoom into an hourly is because I want to go ahead and point out this gap. So gaps tend to fill. And so this is actually important, I think, because a gap lower on a Sunday.
Now isn't that, and correct me if I'm wrong, I'm guessing here, but isn't that a CME gap?
Exactly right.
Okay. So and what is a CME gap?
So a CME gap, CME, the Chicago Mercantile Exchange, is where many of these futures contracts are traded from. So you would say that this is a CME gap. Now, what tends to happen with gaps? They tend to fill.
Really quick, how is that gap created?
So the way that the gap is created, if I go ahead and zoom out here from an hourly to a daily, and from the daily, I want to just go ahead and bring this into frame so that we can see this more clearly. Okay, so let me grab that arrow tool. So this is the close. This is Friday's candle. So Friday the 16th, the close on Friday the 16th was the bottom of that daily candle. That was the candle close. Now, because the markets, traditional markets, don't trade 24/7, 365, you get what are referred to as gaps. So it's a gap between the closing price on one session and the opening price on the next session. So we happen to have a weekend in between the close on Friday and the open on Sunday. So CME futures open on Sunday at 3 p.m. Pacific, 5 p.m. Central, 6 p.m. Eastern. So futures start trading on Sunday. And so the opening price for the S&P futures contract, the front month futures contract on Sunday evening was lower than the closing price on Friday. And so that difference between the close and the open created what's referred to as a gap. And so these gaps, these are really reliable technical analysis patterns or price action patterns because they almost always tend to fill. And so was that a good explanation of a gap, you think, Mike, at how they're created?
David, I apologize. We're going to have to cut this off at,
Gotcha.
Just because the next show, do you want to join us on the next one? We can continue a lot of this.
Yeah, man. So let's see. It's 1 o'clock. I've got my first call in DeFi U at 2. So I've definitely got like half an hour for sure.
Yeah. No. I mean, yeah, you can pop in and dip out whenever you want. I'll shoot you a link. I'm going to jump over there real quick. Anybody that wants to talk, it's basically going to be me, David, Taylor, and Jeff. Again, Taylor's a practicing estate lawyer. Jeff is a certified financial advisor, and we'll be talking about just wealth preservation. So, and then again, daily. Me and David are going to be doing this. We'll continue this conversation tomorrow. So hope to see you all then. And until then, Fetching Crypto out.
Peace.